We're going to look at today the Home Buyer's Guide for 2020. Any buyers that have questions or want to learn more can visit jumbomortgagesource.com or call 1-800-962-0677. First, we'll talk about the 2020 conforming and jumbo loan limits. The conforming loan limits were increased for 2020. This is the basic Fannie Mae Freddie Mac conforming or conventional loan limit. Right now, the loan limit is set to $510,400 for most of the standard locations throughout the U.S. There are, of course, certain high-cost locations in the U.S., and this would include really many parts of California and the Northeast as well, D.C., New York, and Boston, and really most of New England, Denver, maybe parts of Utah as well. Those are going to be higher cost locations, and those conforming loan limits can go up to $765,600. You can look up your county. The loan limit chart would be on the website, and you can look up your county to make sure that the loan that you're inquiring about, if it falls into standard conforming loan limit or if it is in fact a jumbo loan. A jumbo loan would be any loan that exceeds these conforming loan limits. For 2020, the jumbo loan limits for the 95% financing, the limit is currently $2 million. For 90% financing is $3 million. 80%, those go up to $4 million. Higher loan options are available, of course, with greater down payments. For the 95% financing, the basic details are, again, the loan limit is capped at $2 million. Credit scores for qualified buyers should be over 700. For loans that are over 1.5 million, those would generally require a 740 credit score. Documentation would include really complete income and asset documentation. Income documentation would include W-2s or 1099s. If you're a self-employed borrower, you would want to have your two most recent tax returns for that. And then also, of course, your asset statements, any savings statements, previous 2 months generally is going to be sufficient. Property types would include primary and vacation homes, second homes, single-family townhomes, and most condos are going to be eligible. Investment properties are not going to be eligible. There are programs for investment property purchases, but those would generally require a minimum of 20% down payment. Transaction types would include regular purchase and rate and term refinances. So buyers that want to simply change their rate, lower their rate, or their term on their loan, they would be eligible as well. This does not include, the 95 does not include cash out refinance. Cash out refinances are generally going to be limited to 90% loan to value. The available terms, all the common adjustable rate, 5-year, 7-year ARMs, all the common programs there, and then of course your common fixed rate options, 15, 30-year fixed, and so forth. They're all fully amortized with principal and interest. There are combo loan options. These are combo loan options to prevent really monthly mortgage insurance or PMI. These are commonly referred to as piggyback loans, a lot of times where it's a 80% first mortgage followed by a smaller second mortgage. And again, this is a way to prevent paying costly mortgage insurance. For the 90%, those loan limits, again, go up to $3 million, and buyer's credit score should be at least a 660 for loan amounts that are below 1.5. Higher credit scores will be needed for larger loan amounts that exceed 1.5 million. Documentation requirements, again, complete asset and income documentation like before, and the property types just like before. Primary single-family homes and investment properties are not going to be permitted. Transaction types, again, purchase, rate, and term, and cash-out refinances will be eligible most cash out refinances depending on the loan amount. And then all the common adjustable rate and fixed rate terms. And then again, combo piggyback loan options oftentimes to avoid private mortgage insurance. Documentation and reserve requirements. Reserve, when we hear the word reserve requirements, this is the mortgage payment reserves. A lot of times, lenders will require that once the closing cost and the down payment are all paid to close on the loan, how much assets are left over after this, and that is generally going to be the payment reserves. A lot of these programs can require anywhere from 3 months to oftentimes 18 months or more in payment reserves, depending on how high the loan. Obviously, the higher loan amounts, once you get over really $2 million, those can start to require more sufficient reserve requirements. And again, that is just the amount that is left over once the closing costs and down payment are made. An example of this would be if your program required 6 months of mortgage payment reserves to be documented, and let's say your mortgage payment with your principal and interest and everything included, let's say that was $7,000 a month, and the program requires 6 months of reserves. Well, that's going to be $42,000 that the buyers should be able to document and show, again, after their closing cost and down payment requirements are met. These reserve requirements, they can also be met by non-liquid accounts often. Non-liquid accounts like a 401k or an IRA account. So that is generally sufficient to show and to meet reserve requirements. But buyers, again, want to document last 2 years of their tax returns and or their W-2s if they're regularly employed. And again, last 3 months of liquid asset statements and the last most recent quarterly retirement statement as needed. Sometimes that may or may not be needed. Again, home buyers that have questions can visit us at jumbomortgagesource.com to learn more. Please call 1-800-962-0677. We're available 7 days a week. Thank you.